Hey guys, Stock Saturday, and it's been a bit of a red week for me. About 3% down, nothing too much. It's mainly the crypto side, of course. Gold and silver not doing too bad. The S&P is down, actually up on the week, 0.1%, which obviously is barely a move, and the Nasdaq is down 0.87%. So been a little bit quiet. Nasdaq certainly sort of over the last month is a little bit quiet, and the S&P sort of a little better, but still sort of fairly quiet. So yeah, not too much of a move. Stellantis still pushing on strong. It's not quite 99%. I think I'm 96% with the FX impact. But yeah, doing rather well. Broadcom sort of coming down a little. It was sort of $1,400. That sort of trickled off a little, especially after the earnings. Taiwan Semiconductor still sort of coming down a bit as well. Yeah, they're all going to sort of follow Nvidia, I expect. So yeah, interesting. And the miners sort of up and down a fair bit, sort of around copper price and iron ore issues. Certainly Rio and Vale. So yeah, let's have a look at some of the news. So I'm on to my smaller positions as far as earnings go, but American Tower released theirs, and it looks sort of okay as you'd expect REITs to at the moment with high rates and American Tower especially having rather a large amount of debt. So yeah, sort of year-on-year numbers are always a little bit difficult to take too much notice of because of the dilution, but you tend to look at AFFO per share, and that's down slightly on fourth quarter last year, down to 229, but for the full year up 1.1%. So yeah, it's not ideal. Looks like they've had quite a lot of capital expenditure. So yeah, that's not ideal, and they are forecasting quite a lot of capital expenditure. They're seeing growth in Africa, in particular, 11 to 12%, pretty good. America sort of slightly trailing behind the international group as a whole. Europe not doing too bad, and yeah, Latin America and Asia sort of trailing behind. But yeah, they're sort of forecasting 10.33 AFFO per share, which is 5% year-on-year growth, or 6.5% on an FX neutral basis. So it's not too bad, but yeah, sort of certainly looking elsewhere potentially for other investments. I think it is something I would like long term, but yeah, maybe not quite so much at the moment. Sort of been holding on for a little while. So they're showing yeah, 5 to 6% AFFO growth year on year, but it's the balance sheet that sort of always makes me wince a little bit. I think it's still at $38 billion in debt, and that's been pushing interest expense up. So sort of look at this across the years. It was at sort of 700-800 million, and with the latest rate rises, we're up to 1.4 billion dollars. They're forecasting 1.45 ish billion dollars in interest. So that's all money that could have gone to the shareholders if they didn't have quite so much debt. Obviously, they need to take on that debt to fund their expansion. But yeah, I'm just sort of not keen on quite such a large amount of debt. And they're forecasting 160 million in capital improvement capex, and sort of they've highlighted India as well as sort of not being quite so good, still requiring a fair amount of capex as well. But they are sort of, I think, a little bit similar to Digital Realty, sort of hiding a little bit of the capex really needed. Remember, there was a big sort of short article about data center REITs sort of badging up, sustaining capital as improvement capital, and really they were not reporting what they actually need to be spending every year. So yeah, I'm sort of a big fan of REITs long term, but yeah, certainly at the moment I am sort of looking elsewhere. But yeah, they looked okay. Similar story really with Vici, just coming down to their highlight. You sort of look at, again, net income and everything, sort of ignore, but adjusted funds from operations, 53 cents in Q1 last year, up to 55 cents. So it's slow and steady growth. They're still obviously diluting a fair amount. If you sort of look at, well, we'll come to the last year. Still got 17.1 billion in debt. Only half a billion in cash. So that's rather a lot. And the dilution, you see 963 million shares up to 1.04 billion in shares. So that's a fair amount, but they have got quite a lot of sort of property for that, and for the what is that, 3 billion increase in debt. Portfolio sort of gone up a reasonable amount. And I do like where they seem to be going. They're sort of branching out from Vegas, branching out from casinos as well. So just getting a little bit more diversified. So that's quite nice. But the dreaded income expense, same as American Tower, sort of up, well, 25% or so quarter on quarter from last year. The total year, 539 million up to 818 million. That is rather a lot of interest. So they don't like the high interest rates, and at the moment it doesn't seem like they're coming down just yet. People still sort of expecting a May or June cut, but I'm not 100% sure they will. And long gone are the 1.5% or 6 rate cuts expected this year. So yeah, people not too happy with that. And when I say diversifying, they are diversifying, but not so much in the rent income. You can see sort of 744 million from MGM Resorts, 728 from Caesars, 469 from Caesars, and another 300 from MGM, 250 from Venetian, and then that's basically all of the revenues. The only figures in triple digits. You sort of come way down to the smaller stuff. But 38 bowling alleys with the Bowl Aero deal. It's quite nice, and they're sort of pushing around. The guidance to 222 to 224, sort of again similar to American Tower, about 5% growth, but they quite often forecast 5% growth regardless of circumstances, and then it doesn't always come in. But yeah, just showing the debt as well. They haven't really got too much debt, expiring at low rates and suddenly moving on to higher rates. So that's not too bad. Some debt expiring this year, but it's at 5.625%. So that's not too bad. And then most of it is sort of later years at not too bad interest rates. Would expect rates to be way down by then anyway. Geographic diversification is looking a little bit better. They're actually only 46% Las Vegas now, 53% sort of spread across the country. So that's quite good. And they are still saying they've got a decent pipeline of growth potentially. They've sort of got options to buy sort of various properties, 8% sort of cap rate, 7.7% cap rate. So that's always good. They say they look for a sort of 5 or 6% cap rate. So it's decent rent income if they do go for these places, and it is sort of seems to be mostly just buy it off people and let it back to them. So these owners want the income, I guess, or don't want to own their property for the sake of the business. So yeah, it's in various areas as well, sort of outside Las Vegas, some inside Las Vegas, but yeah, it's good to see a decent growth pipeline. So as I say, similar to American Tower, really, quite high leverage, quite a lot of debt. Not something I particularly wanted. Maybe I'll be a little bit happier with them at once Fed funds rate is a little bit lower. Obviously, the price may have gone up by then, but I think if I've got growth, sort of higher growth elsewhere, I'll be quite happy to sort of sell that higher growth and buy into some of these REITs, maybe even at a higher price, because I'll be sort of up on the deal, if you like. So Riot platforms. Why am I looking at Riot platforms? I have made a change. Some people may have noticed I was commenting and have been talking about Riot platforms for a little while. This is mainly sort of looking to buy the crypto miner dip. We've had sort of a fair dip in the last month, really. But Riot platforms have had this an awful lot more than CleanSpark. So I'm not 100% sure whether I want to start sort of switching significant amounts of my CleanSpark into Riot platforms, but I did sell Tritax Big Box, sort of not a huge position, similar to sort of my other REITs, and I put that into Riot platforms during the dip this past week. I didn't catch the bottom because I never do, but that's just me. But yeah, they're sort of growing similarly to CleanSpark, but they do have a few more sort of issues. They've had some issues with some of their mining rigs, and they've done an awful lot of dilution. Sort of basically, if we look at the operational update, they've been sort of doing a lot of dilution to fund this growth pipeline. So people like CleanSpark have sort of just finished a large part of their expansion, and they now hopefully shouldn't be diluting all that much, but Riot certainly have been. But it's to fund this quite large growth pipeline. So CleanSpark are at 16 exahash now, and Riot sort of were a lot bigger than CleanSpark. They were sort of way ahead of them, and they're still at 12.4 exahash, but sort of look at this year, by the end of June, they're thinking they'll be at 21.4, and then sort of 27 by September, 31.5 by the end of the year, and sort of a little bit more growth next year. But take next year with a pinch of salt. I think sort of end of this year is a reasonable amount of growth, and yeah, I don't think they're getting the love for this growth. So they're sort of a less lower market cap than CleanSpark at the moment. And just looking at their sort of operational update numbers, yes, the Bitcoin produced is lower, but as I say, sort of in a couple of quarters, they should be sort of well up on that. And they also hold 8,067 Bitcoin, where CleanSpark are at I think it was 4,200, so it's quite a lot better, sort of $300 million worth of additional Bitcoin, and they have about $590 million in cash on the balance sheet versus CleanSpark's 48 million. So yeah, it's an enormous difference in sort of balance sheet, and hopefully the Bitcoin produced will sort of increase to match, if not overtake, CleanSpark's. So yeah, being a lower market cap currently, I just saw them as an interesting buy. So let me know if you're interested in a more sort of detailed review over Riot, or a comparison between them and CleanSpark. Appreciate sort of we may be a little late to the party on looking at miners at the moment. Sort of obviously, CleanSpark at least is part way through a sort of large run up. Where are we? 320% up on CleanSpark. So obviously we've had a fair run, but as I say, Riot are sort of pretty much where they were in April time last year, when Bitcoin was at sort of $27,000. So yeah, had a hell of a run up since then, and Riot doesn't seem to be getting the love. So just checking in on economic news. It was a relatively quiet week apart from the CPI numbers. We also got UK unemployment rate, but that's for January, 3.9%, so slightly higher. Whether that was a revision from a previous number. And then Tuesday we got the US CPI. So this was the big news everyone was waiting for, and it's not the best news. It was higher across the board than expectations. Core up, core year on year up. Headline for the year is up. Headline for the year is actually up on last month, not just above expectations. Only 0.1%, but that's not what people want to see. 0.4% for the month. And the core was down, but it was expected to be 0.2% down. It was only 0.1% down. So, yeah, coming down 0.1% sort of a month later. It's not what Jerome Powell wants to be seeing. So, I think the May rate cut is probably out of the window now. It'll just say they need to see more data. I think we've got the March meeting next month, and he'll just say we need to see more data. It's not happening quite fast enough to do a cut. But I think he may even sort of hint at no cut in May. So we'll have to see more data and sort of hint at waiting for June. So yeah, the market didn't particularly like that, and certainly crypto had a bit of a volatile week. Whether it was all down to this, I'm sure it isn't. It's just because it's sort of bobbling around all-time highs at the moment. But yeah, that was Tuesday, and then sort of not a huge amount Wednesday. Thursday, you just had the jobless claim numbers, which were quite a bit lower than expectations. So again, Powell will say nothing's particularly going wrong in the job market. You'd think initial jobless claims would be a sort of the earliest indicator of unemployment, and then yeah, nothing on Friday. So just looking at the portfolio, CleanSpark, as I say, is sort of not had the best week, but longer term, obviously, halving coming up. I can see miners sort of starting to do well again. Bitcoin is way above a lot of the sort of efficient miners' cost of production. CleanSpark certainly, and Riot Platforms actually have an incredibly low cost of production because they do a lot of switching off and selling the electricity back. Maybe that's a little bit misleading. If it's not as if they've got a low cost of production and are going flat out the whole time, but they count that as sort of very efficient. But the gold and silver miners have really picked up. Gold sort of isn't up this week, but I think people are just noticing sort of their price is very healthy for gold miners. So yeah, Coeur Mining sort of up well over $3 now. Equinox Gold $5.20. It's pretty good. And Fortuna $3.44. That was sort of well below $3 for a little while. Similarly with Coeur, sort of $2.50, and Equinox in the low fours. So yeah, a good move up. They're pretty much all in the green now, apart from Fortuna, which is just at break even. And the REITs, as I say, are becoming sort of a much smaller, sort of all around, 1 to 2,000. I'm sort of considering maybe averaging in selling one of these REITs every now and then for Riot Platforms if it's sort of not going anywhere, or if it has a reasonable dip. So we'll see. On the Interactive Brokers side, it's been a pretty good week. KGHM sort of rising off the back of a reasonable copper move, and silver, I think, $25 silver hit. So Pan American doing quite well in addition. So it's pretty good, reasonably good week for that ISA. And on the invest side, options sort of doing pretty well. The Chinese tech has barely moved, as I seem to say every week. But yeah, options sort of doing really well. Certainly the gold and silver options. The Equinox position is getting pretty big. I did buy a little bit more It's way up, but I still see this as a reasonable sort of risk reward if Equinox is going to go where I'm hoping it's going to go by the end of next year. So yeah, bought a little bit more of those. I did actually pick up another 5 Himax as well, sort of at I think a reasonable price. So yeah, options sort of doing quite well, and I am pretty much dry on cash now. So considering I do have about 2,000 on the sidelines, I may deposit that in and see where we go. Sort of the options are a lot less attractive, but I still see them as probably the best sort of risk reward even at these prices. The only other sort of option I would have is obviously waiting until the new tax year and putting that in the ISA, or maybe buying sort of crypto miners, something like Riot Platforms, in the general investment account and getting taxed on it. So yeah, I still think probably options. So might see this it's back up to sort of £2,000 by the end of next week. So yeah, that's the portfolio for the week. It's down, but some things do sort of doing pretty well, and I think if the crypto miners have a bit of a rebound, then I should, with the gold and silver, be at quite a nice high. So leave your thoughts in comments below and like and subscribe. See you soon.